Hello everybody, my name is Nick Groves, your host here with Trading Analytics, and today we have a lot to talk about with CPI data out tomorrow morning, 8:30 a.m. Eastern. We saw the stocks inch higher into the close, but that's not the whole case for today, so we have a bit to cover. I'm going to try and keep this short for you all, so just stick around. But we have CPI tomorrow, and this is Forex Analytics dashboard. I use them for all my data, and looks as if tomorrow CPI month over month, as far as the core, is supposed to print a 0.3. Previous was a 0.4. You can see the year over year is expecting a drop from 3.8 to 3.7. To kind of give you the math on that, if you go down to April 12th of 2023, you saw we printed a 0.4. That runs off, we print a 0.3, which eventually equals a 0.1% drop. But it is kind of interesting because if you look at the month over month that's not core, we're actually going to be ticking higher year over year. If you take the runoff from 0.1, add the 0.3 forecast, that actually upticks the year over year with not core up to 3.4. So could get interesting tomorrow, especially if the core ticks higher, but that's for the data to decide, not me. But let's talk about what happened today. So this is the S&P Cash, SPX, and as you can note, we saw a bit of volatility. We saw a rally into the close, but we saw a sell-off early in the morning within the first 30 minutes of the open. Now, the S&P has been in a bit, and this is the ongoing contract, it's been in a bit of a range really since Friday. I've been looking at it pretty much exactly like this, and when we saw the breakdown here at 31.95, it just accelerated. Now, it did not take out the previous low from Thursday, and I think it actually came right up towards the 7.86% retracement, tagged it, and then reversed. Now, I imagine in the event, because there's probably a lot of stops up around here, around 52.30, if we stretch higher, the next level of resistance is 52.40. Now, as far as the downside goes, and this is what makes CPI really tricky, is that we actually back tested this massive channel that we've been in all year, and we've been holding it. Now, if we get above if we get above resistance here at 52.25 or so, it looks like we're straight on the path to all-time highs. If we don't, now let's say we come down and break support at 51.50, I think the next stop up is 5100, and then below there is going to be 5150. We saw a lot of moving parts today between the big tech and the Dow. I'll go ahead and jump into a little bit of the Dow right now. The Dow was very similar as the S&P. It also was range bound since Friday. It broke down, accelerated, breakdown of the range, accelerated, popped back up, and now is back in within the range. All three indices did this. Now, before I hop into the Nasdaq, I do want to mention the Dow has been the weakest of the bunch. When things have started to fall in the equity markets, the Dow has been the first to kind of lead the charge. It did come down and test last week. It came back and it tested the 50% retracement of pretty much the 2024 range. Now, I find that significant because the other two, being the S&P and the Nasdaq, have not. Now, in the event it rallies above this range, it might want to back test the channel as well. That comes in around 39.675. That's what I'd be looking for tomorrow. Now, let's get into a little bit of the Nasdaq, and then I'm going to dive into the big tech. So the Nasdaq as well, same thing, range bound, broke, came back above. Now it's actually at the upper end of its range. In the event that it wants to stretch and take out some of these stops, let's say CPI comes in line, market goes, oh, that's whatever, it rallies, and then they start to look at the not core CPI and they see it tick higher. Maybe they get uncomfortable. Maybe this is an opportunity for you to take a short here at around 18,492 or so. That's a trade setup. You know your risk is going to be above 18,700 or so, and size accordingly, people. But yeah, I think that's a possibility. Even if we don't end up turning around, I think this target is definitely a possibility. In the event that we break to the downside, I think that the market has been waiting for a correction for some time, and in the event that it accelerates, I think it might be rather fast and quick. But just to give you guys an idea of like even the 38.2% retracement, which granted, we come down here, this trend is still bullish. It would be around, call it 17K. That would be a healthy correction in my book. Now, prior to the Nasdaq today actually turning red, we did see the Mag 7 turn red first. That started off with NVIDIA. NVIDIA has been like the S&P was in the Nasdaq and the Dow in a range, but it's been in a range for a bit longer. Now we saw this range poke its head back in the late March, but really it's capped us since the beginning of March and all the way up until today, where it actually broke that range here at 853, 855-ish. You could probably even extend it down a little bit lower to cover these spikes as well. But just below here, we do have a gap that would fill at around 824. And if you take a retracement from the low in February to the highs, the 50% retracement comes in right around 819, 818 or so. So that's a level of support I'd be looking at. Now, I also found that we have a descending channel. So resistance for now is going to be up at 870. CPI is going to be tough, so but I would imagine a rally up to here might get faded. Granted, unless CPI comes in weak, then just forget it. It's probably going to all-time highs. Above 870, you're looking at 925, and above there, the all-time highs at 975. If we get above there, I imagine that we're going to be blowing back above, I'm sorry, not back. We're going to be blowing above 1,000, in my opinion. This has been just a relentless stock, and I'm not surprised to see it consolidating. But we're just going to have to see what happens tomorrow. I'm going to dive into a little bit more of some of the Mag 7. So we also have Facebook. Facebook was rallying today. It ended up closing negative. Now, I've been looking at Facebook on this weekly chart. This dates back to 2017, and we're having a bit of a throwover at the moment. I would have liked to have seen a stronger close, but for now, we're sitting in this ascending channel. Resistance has been tagged multiple times. Support for me is going to be at 499, 500 or so tomorrow. And then resistance, if you stretch this out, is going to be up near 535. Now we're in all-time high land, so the next stop above there is probably a round number, call it 550. We'll just have to see. Very tough to try and short these markets when we are breaking out, so just please be careful. Google, it's also very strong. It's also near all-time high today. And for me, support's going to be back at 153. Now, this is a bearish candle that it printed today, and we're going to have to see how it opens up tomorrow after the CPI. But for me, that's how I am viewing Google, and I imagine a break below 147 or so would likely lead to some downside. Microsoft is remaining in this formation here. For me, resistance is going to be up at 432. We're not seeing a whole lot intraday. It's pretty much just been range bound. I don't have much of an opinion on it until it does a little bit more for me. But I know that this ascending wedge is a bearish pattern. In the event we break 418, you're likely to see some downside. But for now, this is bullish, and resistance is up at 432. Apple, not bullish. It looks like a pile of shit. Sorry. But it's been sitting down near this neckline. This is technically a double top. In the event it breaks the neckline, I'm looking for a break of 168 to accelerate. I imagine that the first stop is going to be around 161 to 160, this 50% retracement. This is a very larger time frame chart. This dates back to December of 2022 at this low. So these take time, and I just believe that with the news lately has been tough in Apple. It had weak sales in China. I believe they're getting sued by the U.S. Justice Department over the iPhone monopoly. So it's just had a really hard time lifting off the ground. And if we do see equities roll over in this rising volatility market, Apple is likely to get hit. That's just my opinion. But in the event a double top played out, you're actually looking closer down near 140 for the actual target. So just be careful with this stock. Now, sometimes it pays to be optimistic. I'll let you do that if you want. As far as Amazon goes, now Amazon, man, I really wanted to see it break below here just to get a little bit more exciting. But for now, it has broken resistance, and it's been holding. It's been quite bullish in my opinion, back testing where it's supposed to. So for me, resistance is going to be up at 187. Above there, I'm just going to be looking at the whole number of 190 or so. I have an alert set up here. If it gets back below 184, I imagine it's going to be a false breakout that should actually lead to some form of a breakdown below 181. That's if that happens, okay? One other stock that's been bullish today has been Tesla. Tesla actually broke out of this bearish wedge, and I was really not expecting it. But it's really, I guess if you were someone who's looking to buy some value, Tesla has been sold off over 30% at one point this year, and maybe it's getting, maybe you're seeing some profits peel on big stocks like NVIDIA. Maybe they're going into a little bit more risky business with a stock like Tesla, but it's still making lower highs. It's still in a very strong bear trend, in my opinion. It did come up and test the 38.2. Above there is going to be 182, excuse me, the 50% retracement, and above there will be 188. All three of those scenarios is still bearish. Unless it gets back above 205, still creating lower highs, still a bear trend. In the event that it breaks back down, I imagine that we come back and actually retest this gap down here at 146. This would also be the lower end of this wedge. So that's something that I'm looking for. I already covered NVIDIA. I'm going to show you guys one more thing. It's actually my Mag 7 composite chart. We've been sitting and fiddling with support the last few days. Now, do note this is a composite chart, so it's not perfect as far as technical analysis goes. I just like to view it. It was giving me a lead on the sell in the Nasdaq earlier. It was falling before the Nasdaq had actually turned red. So I like to pay attention to this. If you want to pay attention to it or just watch me pay attention to it, follow me on Trading Analytics on Twitter. I'm looking for a break of 2408. I think that would signify some more downside, and I think that at some point we might actually come and retest some of these levels that caused a breakout in early January. I think some of these levels are going to get retested. We're seeing, and this is the last chart, a rising VIX. It's making higher lows. We did reject up near 16 today, but really 16 is the new crap hit the fan level. If we get above 1650 and even 17, be careful in equities. They might be ready to roll over. Sometimes I'm looking at the VIX for some clues. This is a messy chart at the moment, so let me just clear this up. But right now I'm viewing it as in this channel. Support's going to be around 1480 or so. Resistance at 1620. For instance, if I'm looking to be short and press a trade and I see the VIX breaking out above here, it's going to give me more of an inclination to actually press that short. Conversely, if I'm long and we start breaking, say 1425, 14 and a quarter or so, I'm likely to press my longs. So that's just how I view the VIX. But with that, I imagine this might pick up a little bit tomorrow, so just get some rest, stay safe, happy trading, and I'll see you all very soon. Thank you so much.